Hi, everybody. Today's May 16th. We have some big news that has recently been released, and we want to make sure you are on top of what's happening. So, first and foremost, I was expecting the Department of Ed to release this news, but they have extended the income driven waiver, repayment waiver, which is essentially an ability for people to consolidate their family educational loans and Parent Plus loans and get prior credits counted towards repayment, as well as enroll into an income-driven plan. So I wanted to talk about that first and foremost. That deadline has been extended till June 30th of 2024. The opportunity is really big if you originated a loan back in the Obama days a while ago, and you had for example, like a Citibank or some private servicer manage your loans, even though they're federally backed. Those were called family educational loans. You can consolidate them, make them direct loans, and qualify all the prior payments you've made towards the 20 to 25 years of repayment, depending on what income-driven plan you enroll in, to get more payments counted and get to the ultimate end of repayment, right? So I wanted to announce that first and foremost. June 30th, 2024. That's a really important date. If you need help consolidating, we are here on standby. We can help you. You can also do it at studentaid.gov to be transparent. If you want some information from us, though, in terms of what it means for your loans, for you to get full context into what it means for your loan situation, and or possibly you may have taken on additional loans, how you consolidate really matters, because with the IDR Waiver, you are allowed to consolidate with older loans and get more payments counted, even if you've taken out loans more recently. So we can help give guidance around what loans to include in the consolidation, and that really does matter in terms of the ultimate loans you end up paying and for how long and how many of them. Okay, so that's where we can help. Again, you can get a free plan at myloansense.com. That's the first piece of news. The second piece of news I definitely wanted to talk about is the fact that Biden is basically, we're in a commenting period right now to essentially allow interest payments of up to $20,000 for those that earn under $120,000. If you're single, if you're filing head of household, it's $180K a year, and if you are married filing joint, it is $240,000 for the couple. And the idea is that if you've had accruing interest pile up on your loans at a higher rate, and basically you owe more than when you graduated or when you took out the loans, right? Because unsubsidized loans continue to accrue interest. You may qualify for up to $20,000 of your balance to be reduced, basically to eliminate that accruing interest that so many of us have. So just to give a little backstory. Okay, so Biden passed SAVE, right? The SAVE program. The SAVE program stops accruing interest by forgiving interest year over year. Well, before SAVE existed, even though you were on track to get your loans forgiven, every month, let's say your payment's $600 and the government says only pay $100, that additional $500 would just continue to accrue. And some events would lead to the capitalization of that interest, which literally means all the interest that piled up gets added onto your principal, and now interest is accruing on both that new balance, right? That all that interest you didn't pay. That's what capitalization means. Well, SAVE has stopped that. And there are people who, before they enrolled in SAVE, they had all this accruing interest. And Biden's $20,000 of forgiveness is to identify those people with a high amount of accruing interest before SAVE rolled out and forgive up to $20,000 of that accruing interest to make up for the fact that, you know, fundamentally accruing interest shouldn't accrue so quickly that, you know, you are owing significantly more years later. That's really the principle of it. So there's open public commenting period right now, which is basically taking the public's comments on this specific plan. Once that closes, then the Department of Ed will take time to establish the full rules for for giving this $20,000. I wanted to bring that up. So in saying that, it's going to qualify specific borrowers who are underwater, who may have gone into graduate repayment, for example, as well, and who also had accruing interest due to being put on periods of deferment and forbearance. I wanted to mention that. And essentially they were made worse off, okay? Those are the people that Biden is trying to get the $20,000 of forgiveness for. For lower income borrowers who can get relief, that they say lower income, but it's up to $120,000 I mentioned in a single person's earnings, but I guess that's how the administration defines as lower income, as well as individuals who have entered repayment 20 or 25 years ago. Those individuals still owing debt 20 to 25 years because they're experiencing hardship. Those individuals are also prime targets for this legislation. And lastly, I wanted to mention that as of right now, the Department of Ed is not going to require an application to access this $20,000 of forgiveness. But they may require an application for specific cases of hardship. So they're trying to do it without requiring an application, but it looks like because of legislation, it may be hard, and so they may need to require an application. So the full ruling on the whole details on application, who qualifies, that will be released soon. I just wanted to come out with the pressing news that this is now by the Biden administration's way to get $20,000 approved without challenges that result in Supreme Court cases. So this is the new way Biden's trying to roll out this $20,000 of student loan forgiveness, okay? The reality is interest rates on student loans are at record high levels, and the president recognizes the hardship. So for example, federal student loan interest on average is about 6.53% for undergrad loans, 8.08 for grad loans, and 7% for parent loans. I'm sorry, 9% for parent plus loans. That's a very high interest rate. So he recognizes that people are very much struggling and want to provide some relief by giving $20,000 of relief on accruing interest. Those are my news updates. I also wanted to mention really quickly public service loan. It looks like public service loan forgiveness, the program, is being moved over to the government and will move out of Mohela's hands very soon, okay? If you're a public servant, listen up. In fact, I should have put that PSA at the very beginning, but I will put it in the description. Public servants, what does that mean? You're still going to have to submit a public service loan forgiveness application, and we recommend doing it every single year so you can get your payments counted. But now, instead of sending it to Mohela, we now send it into the Department of Education. They're managing it themselves now. If you work with us, we will automatically manage that for you. If you are doing it on your own, it's just going to be sent to another, directly to the Department of Ed. That's the big update I wanted. And also, they're holding applications and not reviewing any public service loan applications until the end of July, I believe, middle or to end of July. So if you've worked with us and we've filed anything for you for public service loan forgiveness, we will remind you to check up for some kind of notice from the Department of Ed once July hits. If you do not work with us, just know that you can still submit to that new number. Just recognize that you will get no updated payment counts likely until the end of July into August, okay? Just because the rate response, right, from the Department of Education, we can't expect so much so promptly from the government, right? Let us know if you have any questions. I hope that those were interesting updates, and please like, subscribe, comment, and we make content based on what your comments and what your questions are. So please send them our way. I am so happy to come to you with a news update, and until later, thank you.